Good morning, traders. Captain Jim James here with your daily brief for August 5th, 2021. I didn't stick around too much yesterday. I wound up in the morning grabbing some calls off the open, rode them up for a couple or three taps, I think, sold, and then got called away. I did post briefly about counting 2 to 3 moves on Twitter, and maybe we'll take a look at that today if I can for a moment so that you can see when you should start going long or short in day trading. So we'll continue on this day trading path for the rest of this week. If you wanted to go long or short as a bull or bear, full on, we really didn't get that signal today either way. I was expecting, and in yesterday's video, you'll note that I was expecting yesterday to either do a gap up and jump up and push up, or that we would accumulate for a move up. I still hold that belief right now at this point. We'll take a look at the charts and see what it is really showing. It's complicated because I use this portfolio expert software. And on one side, it's saying that the market's going to go down, and on the other side, it's saying that the market's going to go up. So we really are still in this same rotation phase where we don't know where we're going. So where does that leave us? It really does still leave us in this place where we're day trading if we want to day trade. And you really can't claim as a bear or bull which direction we're headed. The only thing that would say otherwise would be where we are in the overall market. We are in a top in SPY, and the same thing goes for Nasdaq. Small caps are a completely other thing. They're very difficult to play overall. I kind of try to separate that index when I look at it. So the thing to think about right now is I saw yesterday people playing off the triple tops and triple bottoms, and in reality, when I got down into the charts, it looked more bullish than bearish. And, the last time this played out, that doesn't play out often to see those triple tops and bottoms be bullish, but I have played them in the past. You really have to get down inside that chart and take a look and see what's going on. And so earlier tonight I posted to not short into strength. And I think that is at least a warning for today. Now, how long that lasts, I can't tell you from now until Friday. And, as we get closer, it's going to become more difficult to find out which direction we move. We do know that the easiest direction is down, but we also know that the market is saying that you can only go so low. So my conviction stands that we go up, though I am willing to switch to a bear at any moment and ride this thing down, especially as we head into Friday. There should be some volatility today, or at least towards end of day. You might have a little panic selling into close, if not in Friday. Now, we do have today initial jobless claims and continuing jobless claims. They are usually material, but we already did get a purview from ADP yesterday. And that is important that we have that. The market reacts to unknown news, not known news. So if the initial jobless claims and continuing claims this morning miss, we already know that from ADP yesterday. It's kind of like a lead up to bad news. Now, the market truly is looking for non-farm payroll and the unemployment rate on Friday. The unemployment rate is kind of neat as well because it takes into account people that are claiming unemployment. That's built into that unemployment rate. Now, if people aren't claiming unemployment, it's not necessarily negative to the economy. As far as Wall Street is concerned, the worse off the economy is, the stock market should go up. And that is the oxymoron, or the difficult thing for people to wrap their heads around. Tapering is happening in my mind. From what I'm seeing in the mortgage markets and in the bond market, I think some of it's very quiet. So I think that they are tapering to an extent, but you're not going to see rates increase for the general public to look at as long as you see people that are unemployed, people that are at risk of losing their homes in the foreseeable future. Now, the Delta variant and coronavirus, those fears, which just kind of makes me scratch my head. If you're a bear, you would want to downplay those risks and not upplay them. So the more that they are upplayed, the risk of coronavirus and other variants and school starting in the next couple weeks and maybe a shutdown in the government, I think that the misguidance is that these are expected things. You know, when coronavirus happened, I knew that we were going to drop the market, and I think a bunch of people did, but John Q. Public did not know that the market was going to drop, and John Q. Public did not know that we were going to shut down. So when it's expected that we might have shutdowns or we might have Delta variants enforcing some sort of measured lockdowns coming into the fall or winter, it's very different than an unexpected move. And that you can see that in stock price movements. If something's expected, you'll see the intrinsic, extrinsic, been talking about in a couple days, value of options fluctuate based upon how unknown and known the news is. So if you're expecting a great ER on a stock, you will see the value of that option raise, at a slow rate if there's interest in that stock meeting those expectations and going up leading up to that ER report. Now, if there's something unexpected in that ER or something expected in that ER report and the ER report is different, you will see, the value of those options swing wildly until they're absorbed. So think of that like you think of the market. The more that we know, the less fluctuation there is in the market. And so to think that the Delta variant or any other variant is going to, send us back to March lows, it's just not going to happen. And then the other thing to consider is you're talking about the Fed. And when you talk about the Fed, right, and that we're going to drop the market, that is possible. It's always there. That specter is always there. But you have to understand that Jerome Powell does not want to leave his legacy as I lost this market. You have to understand that the players within the internals of the market know that the market is bad and they will keep it up as long as they possibly can. Or even if they slow it down, they're not going to be blindsided by something right now. Really, that chance of that happening at this moment is very low, much lower than in March of 2020. So moving on from the market watch up here, I slacked off by showing you ES this week. We're going to turn that off over there. We're going to move on to ES, and I slacked off on this week showing you ES in conjunction with SPY, which I should do, especially for new traders. They often have this mantra of futures don't matter, and they do matter. And they kind of put the puzzle together. You'll often hear futures traders, PJ traders, pajama traders say that they repair what was done in cash market. And it's important for you as a trader to, at the minimum, understand futures, understand the ES, to understand where our market lies. Oftentimes, savvy traders will buy these lows and highs in the futures market to ride them for max gains. And you can kind of see how this is happening here. This has been a very good week for ES traders. It's been very consistent in its movements. This is the chart that I really was talking about in Twitter earlier, which is not shorting into strength. This chart right here normally would look very bearish to me, but I have some real concern with this attempt here, and specifically this third attempt down here. This one, not so much. This one we should have dropped normally in a normal market. This response here, though, still weighs on my mind. And then again, yesterday on the 4th, we didn't drop. Now, the prevailing thought is this is the easy way down. And I don't disagree with that easy way down process. But this market does, I said we should logically move up yesterday up here, and we didn't. And in all honesty, I went back and looked to find out why we didn't go up. And this fits in an accumulation phase. So this still fits the narrative of us going up today. Now, how do you play this move? as a bull or bear, you really can't. We're still in the same movements each day of looking, and we'll look at the SPY to show you where you should be bullish and bearish today, as they do change each day. And when I do want to apologize for taking so long making this video, but it is important because you can get burned, especially in this middle area right here. And then one last point, I know I've already said it once, but I want to come back out real quick to that 1 year. This is looking bearish overall. If you were to ask me, talking to anyone, I would say yes, expect a correction. Anyone would say that, and that would be the plausible thing to say. And this does look legitimately like at some point it's going to dump down into this area at minimum. In the past, though, we have traded above this, and the longer that we stay in this range, it is, and we have had, you can't deny that we've had 2 drops in May, 1 in June, 1 in July, and then this pattern right here is starting to really shape up to give me pause on my bearish side. We'll switch over right now to the SPY itself. I think I'm on the 3-month chart here. Let's get a little bit closer. Let's get into the 1 month here. And these are still our targets down below. Nothing's really changed here. And I do expect the trading range to tighten up today, even tighter than yesterday. So we're going to put these ranges in here, and I'm calling for 39 or 439.44 to 442.0. But in reality, you're definitely, until we get to somewhere 438.68 or above to 440.33, I'm bullish up here and I'm bearish down here. And this is, simplified charts. This is really what you're looking for. If we break below here today, bounce up and continue down, your next targets you really are looking for is somewhere around 436.87 for a minor support, but we might as well go down to 436.08 or 435.34. Now, if you are bearish in this scenario here, this might be the fake out for a bull push up. As time has passed, we are getting closer and closer to that 20 MA. I think this is the 20, and I think this is the 50. I could be wrong, but as time passes here, we might be having a correction without too much downside movement. This would frustrate bearish traders, or this could also be a way for the Fed to get us down where we need to be without having a full down or a full meltdown down here to 422 or even 428. I think it's now moved down to like 425 or up to, let's say, 428 or something. I mean, you can put this on your own charts. At any rate, let's consider that we keep going sideways here and we have some bad news on Friday, and we come down and we tag here, and this is kind of like a moot point, right, at this point? And even down here is kind of a moot point. And let's say you're overly bearish, even coming down to 421 or 428, 429. I mean, none of this is really huge movement. We've kind of just deflected this massive move down that could set the market into an over 5 to an actual 5 to 10% move down, a crash of some kind. So keep that in mind. Now, if you're bullish for tomorrow, anything over 440.33, let's say we bounce up, we tap here and start the move up, I would take that play tomorrow, and you would have to consider that play up tomorrow. And I'm calling for that to 442, although it would not surprise me to just bounce around one more day. And we've talked about each day maybe selling off towards close. That is still on the table, especially heading into Friday. If you're a part of the volatility gang, we know how volatility goes. There will be volatility heading into 8:30 a.m. And if the news is not, burning the entire or scorched or, some sort of scorched earth report, then your volatility will be gone by the time the open comes on Friday. So if you're a volatility gang, please consider that. And one last thing would be that same thing that I talked about earlier, and that's this bottom support right here. And you'll find people, tonight I did watch one YouTube video where they were manipulating how the chart looks. And, you can see I clicked this here, auto. It's just on auto. They are making this look so dramatic. In reality, it's not as dramatic as it would seem. So you be careful of people trying to tell you or trying to swing you one way or the other. And in this pattern right here, man, I'm telling you, this thing bothers me. If I was a bear, this pattern bothers me. This really does. This does spook me for a move that's unseen going up. We already know the move is down. So or at least consider the move up. You should be like that as a trader. You know, when we're coming up like here, I'm always considering the move down, not the move up. When we're over here looking like we're pointing down, you should be always looking towards the move up, especially if we're in bearish territory. Let's move on to the NDX. We had a great day in NDX. This worked out much better than SPY yesterday. And this tagged every support and resistance that we talked about yesterday. We talked about 15,009. We talked about 15,000. I think it was 128. Literally kissed it. This was a perfect play for yesterday if you were in Nasdaq. I don't know what else to say about this to you. I would expect today to have some sort of a retest down here. We probably won't get as far down as this one, as this 1509. Let's call it 15039 or so, right in there. Let's call it, that's 15035. There's 15044. Nope. I think on Twitter I put 15039. That's close enough. Expect some sort of a down movement at open, and then we're going to move our way up to this 15146. 94 possible, 46 a little bit more reasonable. That's 50. I would expect to come down here, bounce up here, or we move up and come back down, anticipating Friday's report. IWM. I don't know exactly what I forecasted for yesterday, but I think we're pretty much where I thought we were going to be. I think I might have said possible as low as 215.63. I did monitor yesterday's movement. I took my focus off of SPY yesterday. I went and worked on a boat. I got this new boat. What doesn't matter? I got this new boat. Yesterday I watched IWM towards the end of the day to see if it kept going down, and it didn't. And it actually, you can't see it here in this movement, but it did catch a bid going into close. And as a matter of fact, I got this little line right here, this little trend line. This trend line I put in yesterday because right here at this moment, it caught a bid in their equity buying. Although this chart doesn't show it, it caught a bid in equity buying, and it definitely caught a bid in call options. So my anticipation is that this is going to rip towards 223 from now until, I would say, minimum Friday, if not Monday. I think market participants that are bigger than you or I know more than you or I. And this was one of the tells for me yesterday. Someone knows more than we do, and my assumption is I'm going to give this like an 80% chance that small caps rips up from now until Monday, Tuesday, Wednesday of next week. The call options that were bought were to 223. I don't know how long it takes to get there, but these guys were rolling in some fat money into this happening. And this could just be how the chart is playing out, but man, I'm telling you, like when I see this stuff on like flow charts, or when I see it in the equity buying chart or equity buying charts of the software, like this stuff, you know, normally if I was just looking at this chart, I would expect a come up and then a straight down, and that is not what the internals are saying. So be conscious of the IWM tomorrow. Another thing too is individual stocks. We're still on that before we move on to Tesla. One of the neatest things we talked about this last week or so about getting back to basics was setting up alerts on charts of where stocks can come to you. Now, GME, I want to go to GME real quick, or AMC, I don't care which one. But these are one of the ones we worked on last week. We'll just type it in over here. And I put some alerts in this one. I put them on AMD and some others as well. I'm going to scale out on this one just so you can see. This is AMC, and I'll show you GME if you really want to see it. Haven't made any changes to this. You can go back and look at the previous videos I've made, and nothing's changed in this chart. As a matter of fact, I got alerts here, and I'm assuming I'll get one here. And you know, when you're scrambling each day to find out which stocks are hitting bottoms and they might spike up, like you've seen. Facebook yesterday was one of them. When you start making these charts on retail favorite stocks, you will start to anticipate to know when to buy a move up. And specifically, or let me give you another one. This is GME over here. Kind of winging this report today. Let's look at GME. I think I even spoke about GME saying, if you really like it up here, how are you going to like it down here at 137? So either AMC or GME, I think people probably heard me say that in those videos and say that, like that's poppycock. There's no way that's happening. And sure enough, it is. It's happening. And this is actually a very bearish divergence on GME. And in those videos, I told you to come back and look at these charts and see what they're telling you. And, if this had bounced here and come over here and maybe taken one quick rip down and up, that would be very bullish to me. But it isn't. This is actually trailing off horribly. So I would start to add more supports going back in time for a bounce. Now, there might be a little bounce here or whatever, but, if you start doing these things, like Facebook is that prime example. And AMD is this prime example. Amazon is another one. Amazon we talked about in those previous videos. And I think I even posted a chart. I think I posted this chart. Let's do it in a 5-year. I posted this chart right here on Twitter. And I got all kinds of flack for posting this chart on Twitter. And sure enough, we tagged that line. You can see that trend, that established trend line here, and that's kind of a middle line, but it's like a top if you're buying the bottoms. And I spoke about how long we stay down here. I said maybe a month or so. And the shortest time frame was, I think, 3 days. And of course, we're at the 3-day mark, and this was picked right up. So in reality, when you're watching these videos that I post, you should be paying very close. I mean, this sounds so condescending, but these things work. So these things work. This isn't like shit that I make up my mind or whatever. And you can see on a smaller scale, that tag right down here. None of this, I've changed none of this. So you could see a buy here and a buy here, you would have won. And I talked, and people were like, someone did ask, and I said, well, it could drop another 100 to 300 points in that large scaled out chart. But I did say, if you're bearish, it's time to pack it in. This is not the time to be bearish. That's the time to be bearish. That's the time to be bearish. There's nothing in this chart that says that it's bearish on a larger scale. So keep following along. Go back, watch those videos I've made. It is critical for you, especially if you're not, dude, I'm telling you, if you are not a winning trader overall, and I'm not talking like 10% or 30% in a year, I'm talking about like 10 or 30% minimum per week, if not more. And you should be hitting 1 to 3 times a year, some like 10,000 baggers, like that much. So if you follow along over time, you will start to make an income you won't have to work, and you'll be able to pack away a retirement and an investment that you won't have to worry about what you do. I don't know how to explain this. Like I own my cars. I don't pay for cars with loans. I don't buy my houses with mortgages. I just buy them outright, with cash. Everything I own is cash. I don't know how to explain this to you better. This isn't trying to be condescending either. I get frustrated watching these YouTube videos where they give you clickbait for tickers like Robinhood or AMC or GME. They're dragging you into these videos. Or I see videos where people don't give you a decision on where they think the market is going. It's more clickbait to get you in, so that you become a consumer. You're consuming their videos. You're not actually becoming a non-bag holder. You're not actually becoming someone that makes money day in and day out in this market, or a few times a year, or 3, 4, 5, 7 times a year, knowing when to go in and when not to go in to trades. So I think eventually I'm going to stop making these videos and just leave them up for you guys to have over time, to revert back to, or to turn a new trader onto. Now let's move on to one more. I got a little bit of a tangent there, right? I think I'm on a way tangent. Let's go over to Tesla. If you Tesla people sat through all this shit, I apologize. Let's move over to Tesla, and sure enough, Tesla did exactly what we thought it would do today. We talked about hitting this. I think I said 705. Yep, 705 is what I said, and I think it tagged 706 in the overnight. And then I said the max to go into was 726, and it was, I don't know, 726, 27, somewhere in there on the cash chart. And then it came right back down. So if you took that risky trade, congrats, you must have made bank. And if you are more conservative, my position still stands in that conservative play is to wait for this to come back down and buy the next run up. As far as today is concerned, we're getting much too close to Friday to risk it. There might actually be some sideways consolidation today. You're waiting on news at this point to either drop off down here or make this move up to 740 if things go well on Friday. I think that's all I've got for tonight. Sorry to talk your ear off longer than usual. I wish you all well in trading today. Of course, I will be there at open, and I'll try to be back for close. Unless something significant changes, I'll drop my. I'm trying to paint, or not paint, but shellac some wood that was a disaster yesterday. So I will try to get back on Twitter end of day if things go wacky. And I will definitely be there for the open this morning. One last thing I just want to say to you all is that I appreciate the support. I do see the views you guys are putting up. Thank you very much. Please don't turn this video off yet. I am. If you are watching these videos, please hit the alert button on your YouTube, or subscribe and hit that alert button on your YouTube. I am going to attempt to do a live stream on Sunday at 12 p.m. Eastern Standard Time. You'll get to see my face. I think I can get this done. I hope. If this thing doesn't come off, we'll try again the next week. But I'm going to try to at least do a live stream so you can see who I am. And I can talk to you guys and find out what stocks you want me to take a look at. If you have questions about the process of trading, if you want to tell me that I suck or whatever you want to say, at least get to know you guys a little bit better than I do right now. So please subscribe, hit the notification button, and if you have some time, I don't care if you're hungover, drunk, or whatever, have some time on Sunday and you guys want to interact, let me know by subscribing and then hitting the alerts button. As always, I'll see you out there, traders.